All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Let's go take a look here at just a couple things here. We talked overall. This market this is a bullish move for the broader market, with a lot of things pushing back up above their sevens. There are a lot of things that are in some bullish positions. Okay, and we've looked at a lot of those here today. Your Googles, even your Apples have really kind of recovered. Your Amazons, Amazon's one of the just a really nice setup overall there. In fact, tech overall is performing quite well here today. At the same time, okay, and we haven't talked a lot of bearish, but let me go and talk a little bit bearish here. We saw last week, early last week, a lot of trend rider bear signals come in, and Carl talked about these. And let's just go to the Colgates of the world, since I know several of you are in those in Colgate. And what is a trend rider bear signal? Well, a trend rider bear signal is basically a signal that comes in that says, "Hey, a stock is ready to fall." And we have Trend Rider Bear and Trend Rider Bull. And I'll zoom in here. Okay. But we look back here in July. We basically have Bollinger Bands, which are relatively contracted. Okay. Relatively contracted compared to what they had been. And then we get a pierce of that upper band. Okay. Tends to lead to an upside move. Here we have bands that are relatively contracted. We got the pierce of that band last week. That tends to lead to a downside move. Now, has Colgate gone down the last couple days? No, but it really hasn't gone up. Okay, and especially today, market being up big, Colgate not up big. Really has not been able to really get much of a move. Okay, on these trend rider signals, okay, when you trade them, the way that I look at them is that my stop is the 7-day moving average. So if I'm in something short Colgate, yeah, it could bounce, it could kind of wiggle around here, but as long as it stays below the 7, I want to give this trend rider bear signal every chance in the world to work. If it doesn't, or it starts to move back above the 7, all right, you know what? We have another bear trap, another 2013 bear trap, and we move on. One of the things that's happening, though, with a lot of the trend rider bear signals that were set last week, the initial selling in this market here this morning in the first hour is coming into a lot of these stocks. These stocks that triggered these trend rider bears, they are getting sold. They are the first ones getting sold here this morning. They, in general, are showing the majority of the weakness out there. And I find that very interesting and to be very, very telling as far as, hey, here's Allstate. Okay, trend rider bear signal. Okay, last week, trend rider bear signal. We have some negative divergence in all of our indicators. Had every reason today to go up. Gapped up, and what's happened? They've just been selling it, selling it, selling it. Okay, so some of these are setting up very nicely from a short standpoint. Take a look back here on Allstate here in August. Comes down to the lower band, doesn't quite trigger a trend rider bear, but notice how it just stays down for quite a while. Just stays down at this lower band before it ends up breaking lower. Something like Allstate, the longer it sits down here in this lower band, the more chance there is of that thing breaking lower, and your 7 kind of becomes your stop point here. Okay, we're seeing a lot of these out there. A lot of these out there. Now, at the same time, there are some really bullish things out there. Okay, I mean, you have things like AKX breaking above $6. You have Visa, you have FedEx, you have UPS, you have DuPont. I mean, you have a lot of still bullish things out there. So I'm just talking about these stocks that trigger trend rider bear signals. Here's DuPont. Triggered a trend rider bear signal here in October. This is what most trend rider bears have done in 2013. They've shot higher. Okay. Notice how it gaps up and goes. Okay. gaps up and kind of took off. Well, compare that to Allstate. Okay. Well, Allstate had gapped up, had everything there for it to go, everything in play for it to go here this morning, and it's not. All right. If these things don't get bought up into here today, even tomorrow, they are in very susceptible positions heading into the Fed. And one of the things that we may do, instead of just doing a straddle, we may go out and do something like a put on something like Allstate and a call on something like Visa or Mastercard, and then ahead of the Fed put stopping points in for the moves. That's something we will look at, but there are a lot of these types of Allstate charts that are out there right now. Your Johnson and Johnsons. Even some of the things like your Schlumbergers. Okay, which had the Trend Rider Bear. Notice the Trend Rider Bear back here. Carl talked about it back on this day. It had that shot up and then broke back down again. Now it's just kind of been sitting flat. To have that next breakdown into the lower band, is still very much potential there with that. So, just as you're looking at your charts and you see the market up, yeah, the market's up. There are some really strong moves here today. In fact, I mentioned Amazon, perhaps one of my favorites. If it's able to hold its gains here today, Amazon for an upside entry is very tempting. At the same time, there still are some downside entries that are out there. You take a look. Some of you who maybe want to get into Colgate short, look, it's bounced right back up to the 20-hour moving average, breaking below the 7-hour moving average. That's setting up very nicely here. Allstate kind of has similar action here on it. From a bearish perspective. So, there's still some of those setups that are out there. Yeah, Darren, you mentioned Zillow making a move. Yeah, Zillow had a nice gap up here today above 75, getting a nice push higher here. Very very similar chart to LinkedIn overall. And Zillow's getting that. Facebook here is continuing its move, continuing its upward trend here. As far as that goes, I mean, there's still a lot of bullish things. Take a look at Owen, Illinois. I was looking at this weekend and drew on my chart and said, hey, close above 34. An easy buy. So, it's really interesting to see some of the weakness in the interest rate sensitive stocks and some of the strength in some of your more cyclical names. And what does that say? Well, maybe we get taper. And maybe we get some of the interest rate sensitive stocks that get hammered, while some of the other stocks, your Techs and your Owen Illinois and your DuPonts and your FedExes, some of your more cyclical names actually get better with some sort of taper activity. Maybe it isn't an all or nothing for the market where everything's going to move up or everything's going to move down. Maybe a taper sends certain things higher and certain things lower. Maybe a taper sends banks higher and consumer staples lower. That's kind of what we could see there. That's kind of what some of the charts are showing us right here, that we can kind of expect to see. I was asked about China here today. I kind of like some of the stuff going on in China. Last night's data in China wasn't really good. It was, pretty lackluster. And, these China names, they're just not in a position for me to be able to buy just yet. Can the FXI come back down to 37.5, start bouncing there? Yeah. But at the same time, they're just not in a great risk-reward scenario, a risk-reward position, or showing any signs it's ready to move. Kind of what I've been kind of expecting here with the FXI. If we have a breakdown, we get that snapback and leave a little bit of a bear trap here, to be able to go higher there. And that's kind of things with China Mobile, Baidu, PTR. I like Kihu, and I continue to have Kihu on my list and says, hey, buy above 85. Okay. Well, Kihu is breaking below 80 here. Kihu is broken below 80 four different times. Well, five different times. Let me zoom in and show you here. Kihu's broken below 80 five different times. 1, 2, 3, 4, and now 5. Not only is Kihu breaking below 80 for the fifth time, but it's breaking below 80 on lower highs. Okay, the highs continue to fall and the lows continue to hold, but now it's triggering a trend rider bear signal. Okay, that's a very dangerous spot for Kihu. At the same time, Kihu snaps back above 80, I can be a buyer, but below 80, for as much as I like Kihu or think maybe it can go to 100, breaking 80 is dangerous because there is no support underneath it. There is really no support till we get down into the 65-60 area, from some of the action back here in August, September. Okay. So, for those of you looking for some of the bearish things out there, there are. And today we're early Monday morning, we're seeing some separations happen. Where we're seeing some strongly bullish stuff, we're seeing some strongly bearish stuff, and we'll kind of make a decision what to get into here as the day progresses, for the challenge. But we're seeing both dynamics there. Potash broke down below 31, right? They had been holding 31, broke down below, tried to snap back above it today, has a little bit of a bearish engulfing on it today. This is the type of chart that, 29 is what we have written all over it, with 31 setting up as a stop. So, Potash, Mosaic, Agrium. Agrium's kind of been an outperformer in the group, but you start to see Agrium break back down below 89, to see the rest of that sector come on down would be very, very easy to imagine there. Okay. So a little bit of bearishness on some of the bullish signals, but keep in mind it's a very strong mix out there. Very strong mix out there, and not entirely uncommon ahead of the Fed. All right, well, thanks for hopping on, and we'll talk to you again soon. Take care.